All right, today we're talking year-end checklist. We're gonna go beyond the 5 basic things that we usually talk about. I wanted to make this into something useful that really, at any point in the year, if you're struggling to be organized and get focused on what you have going on financially, you can just kind of sit down, pick up this checklist, and you could get started, you could get focused, you could get organized, and make some progress. So bear with me here, but it's a perfect time. There's a lot of opportunity in December to still get things done, hit the ground running to start the new year off with some momentum. So first things first. Check in on your balance sheet. Update your balance sheet. When was the last time you did this? This is simply just updating your assets and your liabilities on the balance sheet. Check your progress from the beginning of the year. What do things look like? Have you made progress through contributions, through appreciation in any of your investments? Have you taken on any additional debt? Number 2 on the list, check in on your investments. This could be a good time to rebalance, to reposition. Is there anything in your portfolio that doesn't make sense anymore? Have you looked at it recently? Okay, this is a great time to do that. There are opportunities to do some tax loss harvesting if you have a non-retirement account. Consolidate accounts. Yes, this is a big one, right? So if you have multiple Roth IRAs, multiple traditional IRAs, old 401k accounts hanging out there, multiple brokerage accounts, standalone mutual funds, a lot of this stuff can be consolidated, can be combined. There's not a lot of benefit from keeping additional accounts out there. There's just a lot of overlap. So look into consolidating account. Find your savings rate. Do you know what your savings rate is? This is simply the amount of money you're saving every year divided by the amount of gross income you're making every year, what's coming into the household. So what are you saving versus what's coming in? Find what that percentage looks like. Find what the dollar amount looks like. Invest, pay raises, increase your contributions to various accounts. If you're getting a pay raise, you're due for one, if you've already gotten it, bank that money. Put it into your investment accounts, your retirement accounts, whatever it is, wherever you want to direct it. Put it away somewhere it's going to grow. Increase those contribution amounts if there's room in the budget, right? That's what we want to do. Continue to ratchet that up so we can get that savings rate, investing rate as high as possible. Make your retirement plan contributions. Now, the employer plan, you do need to make contributions by year end if you want tax deductions. If you're putting money into a traditional account, or if you're putting money into a Roth, you still have to make that by year end so you can hit those max contribution limits. Another important consideration, are you receiving the maximum employer match for the year? Keep in mind, the IRS has increased contribution limits for 2024. So you're also gonna wanna go in and kind of take a look at that and see if you need to tweak your contribution amounts. Review your deductions. This is a big one. This is on every year-end list, but it's important. So review your deductions. Did you make your charitable contribution? Have you prepaid taxes? Have you prepaid any bills that you get a deduction for? Have you made gifts that you wanna make for the year? This can be extremely helpful if you're expecting your income to be higher this year than next year. You bunch those deductions. We wanna limit tax liability as much as we can. Review your budget. Yes, I hate budgeting. I think most people do. I'm not big on strict budgeting, but I do find it invaluable to know where money is flowing. So if you can take a look at the last 6 to 12 months of your spending, you can really spot some trends, you can spot opportunities. It's important to know where your money is flowing. If you don't like budgeting like me, try working backwards. So start with the amount you need to save and invest to reach your goals. If it's 15%, 20%, more than 20%, whatever it is, carve that out, and then you can work on your spending plan after that. One other consideration, are there any big one-time expenses coming your way, major purchases that you need to plan for in the coming year that need to be worked into that budget? Making gifts. Yes, we touched on making gifts a little bit. So the calendar year holds significance from this standpoint. You can give up to $17,000 a year to any person without needing to file a gift tax and losing part of your estate tax exclusion amount, your lifetime exclusion amount. You need to get those in before year end if that is part of your strategy, gifting. Hand in hand with gifting is legacy goals. Have you considered any legacy goals? Right now, lifetime giving is becoming a really popular strategy. People want to enjoy their resources with their family while they're all together. Something to start a discussion around. Review your outstanding debt. All right, when was the last time you checked in on all your debt? Have you taken on any additional loans this year? What's the balance on your mortgage, home equity loans, auto loans, personal loans, credit cards? Check in on the details, interest rates, etc. Important to know all this information. Do you have a planned timeline where you want this stuff paid off by? If not, that's another thing to consider. Evaluate your credit cards. So if you use credit cards for daily spending, for monthly spending, now's a great time to kind of evaluate those current cards you have. Do the benefits, incentives they're offering still line up with your situation? It's also a good idea just to shop and see if there's anything more competitive out there. These things are always changing. Different companies are always looking to get new business, so check it out. Request a free credit report. Even if you have excellent credit, it's wise to check in on this thing at least once a year. Look for suspicious activity, anything that just doesn't look right. It's a great way to spot fraud and identity theft, okay? And you can get this for free in a lot of different places, including annualcreditreport.com. Check in on your flexible spending accounts. Are these still a good fit? This is through your employer, this is an employer benefit. There's the healthcare FSA, there's a dependent care FSA. Some of them you can carry money forward into the next year. Some of them you have to use or lose. Check in on those benefits, make sure it's still a good fit for you. Maybe you increase your contributions, maybe you stop contributions. Take your required minimum distributions. Yes, this is important because there's a pretty hefty penalty if you don't take RMDs. If you're turning 73 this year, you have until April 1st of 2024 to take your very first RMD. And then every year after that, you're gonna have to do it before the end of the calendar year. That means you would need to take 2 RMDs in 2024 if this would be your first one and you're waiting until April. Staggered distributions. So if you're considering, or if you need to take money from an account that's going to trigger a big tax liability, consider taking that over 2 tax years, right? So if you need to take a big chunk out of your IRA or a taxable account that has a big gain, take some now, take some in the new year. That way you spread the tax liability over 2 years. Maybe you don't push yourself into a higher tax bracket. Something interesting to consider. In that same vein, if you're considering Roth conversions, a multi-year strategy is popular here for the same reason. You can fill up tax brackets, spread out the liability. Maybe you don't push yourself into a higher marginal bracket if a Roth conversion strategy is part of your financial plan and something you value. Review your household income and tax projections for next year. Is your income slated to be the same? Is it increasing? Is it decreasing? How's that going to impact your tax situation? These are good things to get ahead of if you need to make estimated payments, if you need to change withholding amounts, if you want to save more, or you need to adjust and save less, invest less based on changes to your income. Property and casualty insurance. This is a big one we overlook. Home, auto, umbrella coverage, something we just love to forget about. It's important. Make sure you have enough coverage so if you have a loss, you'll be covered. Liability coverage, also important. So if something happens, you're responsible, you have enough coverage that's gonna kick in and pay for whatever you're responsible for. And then of course the umbrella policy, which covers above and beyond those liability limits on your home and auto policies. Really important thing to have in place, relatively cheap for what you're getting, just talk to your insurance agent. Also good to shop these type of policies because they're notorious for just, having the rates creep up and become expensive the longer you stay with your company. Life and long-term care coverage. Do you have enough coverage? Is it the right type? Term versus permanent? Long-term care is something you need to start looking at. That it's a bit of a changing dynamic within that industry, but important to evaluate the options there as well. Beneficiary review. Just look at your beneficiaries on all your accounts, retirement accounts, if you have a transfer on death registration or investment account, insurance policies, any account that you can designate a beneficiary, make sure it's reflecting who you want. Last one, I'm gonna wrap this up. It's a little longer than I want it to be, but bear with me. Unfinished business. Is there anything out there you set out to do at the beginning of the year? Still time to get things done personally, professionally, in the community. Take a look at it. This is a great way to create some momentum, feel some accomplishment as we head into the holidays and into the new year. So I hope this was helpful. It's not too long.